Hi there, welcome to the Attract Capital webinar series. I'm Janine. I'm here with David Barnett, CEO.
Hi, everybody.
Today we're going to be talking about the benefits of growth capital abundance. So what are the types of growth, Dave?
So the two types of growth that we see in the context of growth capital abundance are ordinary growth and extraordinary growth. Ordinary growth is the day in, day out, maybe low single digit growth rate. And extraordinary growth is when you have an opportunity to do something really big.
Okay, and I know you just said it briefly, but can you go a little bit more into the difference between extraordinary and ordinary?
Sure. So the extraordinary growth is when an opportunity presents itself, sort of a black swan opportunity where you have an opening in the market that you can take advantage of. It could also be strategic growth. It could be an acquisition. It could be a national rollout. But with extraordinary growth, a lot of times it's random and it's somewhat dictated by the market.
Okay, so then what does growth capital abundance allow you to do?
So by its very nature, growth capital abundance means that you have a lot of capital on hand to be able to do the things you want to do, and it allows you, quite simply, to pursue both the ordinary growth and the extraordinary growth paths simultaneously. Most companies have to choose. They have to say either we can fully fund our ordinary year in, year out growth, or we can fund our strategic growth. But when you have growth capital abundance, you can do both. And furthermore, it really positively influences the way a company thinks about the long term. Because when you have a lot of capital, you can do things over the long term. And long-termism is something that is in short supply when it comes to management decision making at middle market companies. So it's a positive thing because it allows you to really think about the best ways to build value.
Okay, and that was going to be my next question. So how important do you believe it is for businesses to think about that long term versus short term?
That's a great question, Janine. And I think when businesses don't have a lot of capital on their balance sheet, they are engaged in hand-to-mouth funding of their business. They fall into the trap of short-termism in their thinking, and they're making decisions that are just good enough and expedient for the situation that they're in. But there's a big difference between a decision being just good enough and being the best or the optimal decision. And with long-term, with a lot of growth capital abundance, you can really chase that long-term, and it really opens up the investment time horizon. So there might be a way that you can completely transform your business, but you can't do it funding it hand to mouth. You really need that money to be able to do it. And that's what this growth capital abundance, that's why it's so critical, because it will really transform how you think about building value.
Okay. Do you have any real world examples of this?
We have many,
Sure
many,
you
many
do.
examples. I'd say one was a company up in Albany, New York by the name of Media, and they did 14 acquisitions because they were expanding nationally. But one thing that they did that was very smart is every time they did an acquisition, we raised extra growth capital, and they invested that growth capital in innovation and R&D. They were able to build these exciting products, and when their industry changed in a specific way, those products became incredibly valuable to the industry. So they were pursuing kind of an ordinary growth, which was acquisition, kind of little company acquisition, but at the same time they were pursuing the strategic growth of innovation that they then were able to capitalize on.
Very, wow.
Yeah.
So that is a really good benefit to have the abundance.
It was a huge success story. It was one of the best growth runs that Attract Capital has been involved in.
That's incredible. So then to wrap it all up, what would you say are the overall benefits of growth capital abundance?
I'd say that the benefits are it transforms your size and it makes you more strategically diverse, which is something that every business should be chasing after. It also gives you an extra capital buffer for a rainy day, which is something that most businesses want to extend their capital runway given the unpredictability of the economy. I think it also, the key of being able to proactively drive your growth as opposed to just reacting to growth opportunities. But if you have growth capital abundance, you're in the driver's seat. And then ultimately, it's similar to what I just mentioned for Transmedia, Janine. Mm-hmm. It helps you increase the value of your company. So if you ever want to sell your company, you're going to be able to get a much bigger price tag upon an exit. So there's great reasons why you want to have growth capital abundance, and it really doesn't cost a lot more to have that abundance relative to the reward that you get for the investment of it.
So Dave has an abundance of information on capital growth abundance. So if you need any more information, he's definitely your guy.
Thank you, Janine.
You're welcome. And we'll be back soon with more webinars. Thank you for tuning in.
Take care.